It's how to grow a small account. You guys will definitely, this is the video that you guys definitely rush and click. Once you see how to grow a small account, it's actually crazy. A lot of traders, this is actually what you want to see. Like you doing something that is impossible, like making impossible possible. But of course, that's not the case. At the end of the day, you can actually make growing a small account to a tangible amount or even a large amount possible. And in this video, I'm going to show you guys how I will trade a $10 or a small account in 2025. And to those of us too that might not actually feel this one, instead of depositing your money into a broker, you can actually purchase a prop account. And once you pass that prop account, the small money can become big money and can give you more equity to actually trade with. So while looking to scale up through prop firm, a lot of traders find it difficult to find the right prop firm because of course they're afraid of being denied payout, they're afraid of getting scammed. They're afraid of not knowing the specific rules that are guiding this prop firm because some prop firm allow news trading or the likes, some don't even. And this is where prop firm match come into action because prop firm match help traders to find the best prop firms that suit their specific needs, either if they want to trade news, they want to trade futures, or even crypto. With numerous tools like account size selection that allows you to select your account ranging from 5K to $2 million in proprietary funds, and even the comparison tool. Imagine you able to compare which prop firm is more cheaper than which prop firm gives better spread than which prop firm gives better leverage than which prop firm gives you an higher payout percentage. Some do like 70% profit split, some do 80, some even do up to 90. So prop firm match is right there and will help you do all of this comparison. Of course, my favorite, which is the search and filter feature. This one help you to filter out which prop firm is actually going to help you refund your money, which prop firm refunds your money after you pass the challenge phase, which prop firm allows scaling, which prop firm allows news trading, and all of those good stuff. Now, all of that even aside, the most important thing, which is the review section. This one, just take for instance, you are going to the market to purchase an item. It will be best for you. It's not even best for you. A lot of people actually prefer if an item is being reviewed to them. Like instead of going to the market and then asking the customer care, is this item good or this product good? Because they know that the customer service will always tell them it is good because they want to sell it to them, of course. But getting a review from a friend, getting a review from another trader that have actually used a proprietary firm is one of the best things that can happen. And now this is even the crazy part. Prop firm match only allow traders that have been funded or have even received payouts to drop reviews, which means traders that just purchase the accounts are not even allowed to drop reviews on this proprietary firm. You have to pass the phase 1, phase 2 and get funded or even receive payouts before they can actually drop their reviews on specific prop firm they've bought. So this future is very, very crazy, man. All of these are unique features in the entire prop firm space just to verify the legitimacy of prop firms and to actually find a prop that suits traders. And of course, if you head down to the discount section, you will see the discounts and offers each specific prop firm offer. Of course, some prop firms sometimes might be doing 50% discount and they like, so prop firm match will show you any of those things that you actually need. By purchasing your prop firm, don't forget to not tick the checkout without benefits because this allows you to get loyalty points. Now, what is loyalty points? Is just basically what you can actually gather and use to purchase prop firm again. So once you've bought like multiple prop firm, you'll be getting loyalty points. And if you use my link that I'll leave down in the description, you'll be getting double of your loyalty point, which you can actually use to gather and then purchase a prop firm later in the future. With like 2,000, 4K, 3K prop firm loyalty points, you can actually buy a prop firm challenge just by getting or gathering loyalty point with it's prop firm match. So don't forget to check out prop firm match when next you're purchasing your prop firm. So without further ado, let's dive into the chart. So first thing we need to understand is that we are trading a small account. Probably we are trading a $10 account, for instance. We definitely know that our account is fragile, guys. We don't want to be entering unnecessary trades. We want to look for setups that are actually sure, due to the fact that this account is fragile. This account can't give you space to be risking 10 times on trades. Max you can risk on this account if you are risking just $2, it's going to be what 5 times, and then your account is gone. That is if you ever go less aggressive. So of course we know that our account is very small, it's $10 that we have, so we want to look for A plus at all. And we got one right here, due to the fact that the change of character have happened right here. As you guys can see, price was buying towards the upside with very low momentum, which shows that all of these buy movements right here, the buy structure was kind of like low. It was more of consolidation instead of even buy safe. So shows that price have a very high chance that it's going to sell. And of course at this point right here, you might identify your break of structure with this level, or change of character with this level, from being a buy to a sell, or even this level. And at the end of the day, I think price ended up breaking both, which is just this drop, which shows that of course price might have stopped buying. It might not be sales that is actually happening in the market. And as you guys can see right here, there was like a clean retest of this sell trade. So price still at the end of the day came back to retest this move, even after breaking the structure, came back to retest this move. And there have been a retest twice. Is this retest right here, 3 times here, 1, 2, 3, which shows that there's a possibility that price might continue dropping. You have like one confirmation breakout, another confirmation retest, 2 confirmations already. So you can just easily reach on this particular one. Like let's take for instance, we took a sell entry right here. So our stops is going to be what? Above this is not going to be above our box at this point. It's going to be above the structure. So this is going to be what? This is going to be the originator of our first trade. This is going to be what our first trade is all about. This is going to be the start of this journey, this particular journey we are going to begin. So you enter this particular trade, your stop loss is infinity. Just do that. So there's no any particular set risk to reward for this particular trade. Just enter and make sure your stop loss is what is above the structure. So with this particular trade, we'll be risking like from 700 to, if I should zoom in, from 700, let me even adjust my this thing. So you guys see where, yeah. So for this particular one, it's going to be what from 700 to 850. I think we'll be risking like 15 pips, about 10-15 pips on this particular one, and of course the MTP is infinity. So this is the particular strategy I used to scale it. Now a lot of traders used to be like, everybody is never a lot of, most people used to be like, when price is dropping, price creates lower lows, lower highs, lower lows, lower highs, lower lows, lower highs. And what you have to do is just take advantage of this high. Once price drop, create this high, you scaling right here. Once price drop, create this high, you scaling right here. Now I don't do this, guys. I don't do this now. Probably it might have been working last year or last 2 years. And as of now, I've kind of like refined my strategy to something like this. If I will be flipping a small account and growing this process. So instead of watching out for this is what I usually watch out for, because I watch out for price selling, creating lower lows and lower highs. And then instead of me watching out for price creating this high, this is what I usually watch out for, price coming back after creating an high to retest the same high before dropping. Still the same thing right here, price still coming back to retest this high before dropping. So this is what we are actually going to be looking out for, price coming to this level back and giving us what opportunity for a sell. So instead of scaling in right here, because sometimes price will be dropping and then they'll say enter once price are formed bigger. When this price is reset, you cannot, how will you know if this is going to be an high when all of this move don't happen right? You cannot know if this is going to be a high, because price might just continue buying right here and the high might stop here, and then you now miss all of this move because you entered early around this level. And of course, let's say the high are moving from before you could get in, price have already dropped to this level, so you'll be getting a late entry. So with this particular method right here, after price drop creates an high, you don't enter off this high, because there's a probability or possibility that price is going to come back to tap this high and give you what a more better entry and a more risk rewarding trade safe. And of course, our stop loss is going to be infinite. Let's take for instance, this was the origin of the trade, right? This is the first thing that I want to watch out for. So our trade, of course, we entered the trade, it immediately started dropping. And then all of a sudden it forms an high, this high right here. Once it forms an eye like this, you mark your eye. Of course, you guys know how to draw your supply and demand levels. You can either use the wicks to draw your eye or use the body of the highest candlestick to mark your supply or demand level. So the possibility that price is going to come back to this supply level and then drop. So we mark it. So let's see what happens if price actually get there or not. So boom, as you can see, price got to this level. And what we do after price gets to this level? See, instead of entering around here, because after price formed this eye, you were late. You were late to like see the eye, or the eye that already formed shape and that started dropping. It's where some people they will have scaled in around this level right here. And then after scaling in, price will now reverse and give better opportunity to even enter a more risk to rewarding trade. So that is that. So after price tap into our supply level, what I used to usually wait for is a full body candlestick closure below the box, below the supply level that you have dropped. So full body candlestick closure. This is one full body candlestick. This is another full body candlestick closure. So let's take for instance, we take our entry right here. Our stop loss is going to be above our box, above our supply level that we've drawn. And then if a market structure comes like this, because sometimes price creates a structure like this, price could literally create a structure like this. Instead of putting our stop loss above the box, we're putting our stop loss above the structure instead. So it's basically as simple as that. So now we scaled in right here. We got our second entry. Our stop loss is right here. We basically like how many pips right here? So from 600, 620 to 700, just 10 pips. TP is infinite too. So let's see if we also get another opportunity to sell. Yeah, so price creates another eye. You see this eye right here too. You can still mark it. It can also be an opportunity, but since it's close to this one, you might not want to take advantage of it. So just continue checking for if price will come back to another eye. As you can see right here, price have tapped into our supply level again. So what we want to watch out for is for a full body candlestick closure below our supply area. Simple as that. But at this level right here, we got a full body candlestick closure below our supply level. So let's take for instance, we'll be taking our entry right here. So at this point right here, our stop loss is going to be also above the box, since there's no any structure right here. So this is going to be entry number 1, 2, 3 on just this particular sale, right? Just by using this strategy. TP is also infinite to continue. Boom, right here. Another eye just formed right here. Still mark out this eye too. Because it could be an opportunity. So you just mark out the eye too, guys. But at this level too, price still came back to touch our eye. So as price came back to touch our eye, what will you be watching out for? That's why I said once price comes back to supply levels, you don't enter immediately. You don't take your profit immediately. After price comes back, it could literally create liquidity before it drops. So you just calm down for price to create a full body, pulls out of that box and create a full body candlestick closure below your supply level. So you don't enter immediately or set a limit or the likes. Wait for price to actually react to that level. Alright, but as you can see, a full body candlestick closures are already forming. So you can either take your entry here or still even be patient. But let's take for instance, as you see a full body candlestick closure below this candlestick, after price tap into this supply level, it was unable to get to this one. Probably it was trying to get to this one, but unable to get to it. So create a full body candlestick closure below the supply area. Our stop loss is not going to be above this box now. It's going to be above this price action, this previous high. Take note of that. You see, this stop loss was above the box because there was no price action above. So if there is price action above, your stop loss is going to be above the area. So at this point, we are still risking like 10-20 pips. As you can see, this is 890, 880, and our stop loss is at 135.40. So that is like 20 pips. It's never up to 20 pips. So TP is still infinite. So let's see how it goes. So this is trade number 1, 2, 3, 4. 4 entries already. I hope you guys are counting it. 4 entries already. 4 entries already. From right here, you can still see another eye right here, right? You can still see another eye right here. You can still, of course, mark out this eye. Price might come back there and give us another opportunity. So let's mark it out. Well, what did I say, guys? No, what did I say? The price came back to this level. So what are we watching out for? We're watching out for price towards to pull out of this level again, give us a full body candlestick closure, and then we enter. So price have tapped into this supply. We're waiting out for price to give us a full body candlestick closure. But we got what our full body candlestick closure. So what you take our entry probably right here. Our stop loss is going to be above the structure, like I previously said, above the structure, not above the box. Once price gives you something like this, it's going to be above the structure, not above the box. This one too, a nice reward. Still like 10 pips you are risky, 10, 15 pips you are risky here. TP is infinite. As long as it can drops, then continue. So like I said, afterwards, after we take our entry right here, you know, all of these entries right here, all of these entries, this entry we are taking, all of the stop loss, as you take this first entry right here, this stop loss is going to be adjusted to this stop loss, and this particular stop loss, after we take the second entry and we get a second or a third entry like this, all of these stop loss are going to be in profit, because this first stop loss is going to be adjusted to this stop loss, and this first stop loss is going to be adjusted to this stop loss, which means these two trades are already what's in trailing stop, which means if price comes back to invalidate this level, it might start buying. So our stop loss are adjusted towards like a trailing stop and at break even or even in profit here, because with this one right here we've gotten like a 1 to 4, or let's not even calculate the risks now. But just know, as much as price is dropping, we'll be adjusting our stop loss based on this level. Now, these 3 stop loss now are going to be adjusted to this stop loss right here. And then these 4 stop losses are going to be adjusted to this one. And then we continue doing it like that, in case of price invalidates. So once price, if let's take for instance now, price invalidates this particular trade, we are only going to be losing this one. And then the rest of this one will be taken out. The rest of these 4 trades will be taken out in profit. Hope you guys get that too. So let's continue. Let's see if this one gets respected, like also boom. So this one was disrespected. So before all of this move actually happened, before this stop loss was hit, let's see how much we would have gotten as we heard. So this was where our stop loss would have been hit, at this particular level right here. So of course it was going to be at this particular level right here. So on just this particular trade, on just this trade right here, we got like about 1 to 6. On just this particular trade, a 1 to 6 risk reward just from this top right here. And then on this one, we got what? A 1 to 10. You can see the risk reward ratio is what? A 1 to 10. So we reach, let's take for instance, we're risking $2 per trade, or $2 or $3 per trade on this particular trade. This one got what? A 1 to 5. This one got a 1 to 10. Yeah, I think this one got, this one, so right here got a 1 to 10. And then this one right here got what? By 1 to 2. This one right here got about 1 to 2. And this one right here got like break even. Yeah, this one right here got like break even. So it's just basically as simple as this, guys. So instead of we entering based off high, lower lows, lower highs, lower lows, lower highs, you could literally take advantage of this, because price forms this right here, and I believe it's more profitable and more rewarding at the end of the day. That is just my take on this specific strategy, and you guys can try it out for yourself and share the results in the comment section. I'll definitely be on the lookout.